Where does it come from? Do you just print it?
As a central bank, we have the ability to create money.
Hey everyone, today is October 29th, 2021, and today we're going to talk about a whole bunch of things that happened in the world of the stock market, finance, cryptocurrency. Once again, we had a really crazy week because if you were paying attention to the crypto world, we had Shiba Inu coin, I guess the next Doge coin, rip a couple 100%. And it seems every week we have, or at least for the last few weeks, we've had these stocks or cryptocurrencies that have just run absurd amounts. And so at the end of the show today, I really want to take a moment to describe and explain what FOMO is. And I know there's people that have been in these markets for a really long time that watch this show, but there's also quite a few people who watch this show who are not familiar with I guess FOMO and trending markets and kind of what to do with them. A lot of people have the impulse to just jump into the next big fad, and a lot of people who are actually really experienced have this tendency to want to short these things way before they've blown off as well. So we're going to talk about two different angles when it comes to FOMO and these meme stocks and meme coins, when not to buy them and when not to short them, and ultimately what I think it really means and what it says about the market and I guess human psychology today. We're also going to talk about unrealized capital gains tax. This is a proposal that's going around in the United States right now to pay for the infrastructure bill. And we're going to talk a little bit about sovereign nations and countries making a 180 on how they approach Bitcoin as an asset class. I always like to talk about the game theory behind Bitcoin, which is that I think eventually every country will be forced to accept it in one way or another as an asset class or currency, and perhaps one day it will back all currencies altogether. And so what we've seen over the last few years is a lot of countries come out and say, you know, we're banning this, we're not going to let banks handle it. Actually, you're not allowed to even trade it or own it. And these countries have slowly come around to undoing those policies. India is the one this week. And in fact, there's some really interesting news about US banks, the FDIC, looking into allowing banks to hold and be custodians of Bitcoin as well on their balance sheet and on behalf of their customers. So yeah, a lot of really interesting stuff this week. Let's just dive into a market overview to just see where we were with the QQQ and the S&P 500. So this week, markets were a little bit flat. Dow Jones is up 0.03%, so pretty negligible. S&P 500 about flat, NASDAQ also flat. The biggest drivers this week were technology earnings. So companies like Amazon and Apple and Facebook reported earnings, and those all were kind of flat, and or actually down a little bit. And one of the main reasons is what we've talked about on the show in the past is this big supply chain crunch right now. Stuff coming out of China, stuff stuck in ports in the US, people having this, unbelievable demand for goods, whether it be for the holidays or whatever, and the supply chains, the shipping companies not being able to fulfill that demand, whether it be on the production end or just the delivery mechanisms. And so Amazon reported that, they missed earnings expectations because of this. Their e-commerce unit has been kind of halted a little bit, and they might have to actually take a bigger portion of the commission that they charge sellers on the platform, probably to make up for some of this windfall as well. Apple also reported that they had a shortfall of around $6 billion because of chips that couldn't be manufactured for certain products like the iPhone or some of their MacBooks. So when it comes to the supply chain stuff, I've said that I do think, some things in life are not transitory, or maybe not as transitory as they seem, like the inflation stuff. But when it comes to the supply chain, that stuff will eventually catch up and fix itself, in my opinion. What happens is if enough people can't get these goods, and a lot of them are not essential things like food, they're kind of consumer electronics, the demand will just wear down over time. And as that demand wears down, you also see a lot of things coming back to kind of raise the accessibility to some of these, shipping freighters and things like that. So more shipping containers go online. They pass legislation like shipping ports are allowed to be open 24/7 now in the States. And so I do think all these things will balance themselves out probably by next year. And I don't think that they have a big impact on some of these stocks. And if you think that inflation is going to keep going, I think some of these dips in these companies are probably decent buying opportunities. So looking past that, we'll jump really quick into the charts here as well. As we said, S&P 500 back to all-time highs basically already. I think this week QQQ just inched it. A perfect weekender here right at the highs. back to all-time highs, dip bought. Congratulations. In this market, you only get, 5 to 10%. Cryptocurrency Bitcoin last week hit an all-time high. This week it's kind of pulled back a little bit, but it's a couple percent away. A lot of people think it's kind of ridiculous that Bitcoin might hit $100,000 a coin, but I was actually doing the math, and it really only needs to go up about 35% from here to hit 100,000. And if you look historically throughout the years of Bitcoin trading, there's maybe about 2 to 10 instances, 2 to 5 instances per year where Bitcoin will run 20%. So if you really think about it, if Bitcoin has 15 to 20% days back to back, or relatively back to back, then it hits 100K by the end of the year. I don't know if that's going to happen. I really can't predict the price, but I say that the further that we go past these all-time highs, the more inevitable it seems. I think there will be some psychological resistance at 100,000. Obviously, people will try and take profit before then. One of the other things, and I'm sorry guys, I wish I pointed this trade out earlier. I took it, but I didn't share it, but I think it's a good one, is Merck, who is developing that COVID pill that really cuts down severe hospitalization deaths by about half. They had really good earnings this week, and their pill is up for FDA approval. I think that pill might be a little bit priced in by this point. This is a $200 billion company. But I also think that if this stock pulls back significantly next week, it's had kind of a really momentous week, I would not be opposed to buying some lottery calls for this. I don't know if you're into options trading, but if you are, I like getting January or February $90 or $100 calls. I think when that pill is approved, you're going to see a good 5 to 10% spike, as we saw with Pfizer and Moderna when they got their vaccines approved. So yeah, keep an eye on Merck. The play really was, they announced their pill and the success of the trial, but it wasn't approved. It had a good gap up and it bled out for 8 days. That was the time to get in. But I still think that there's a play left on this one, and to definitely keep an eye on it for sure if you're into doing options and things like that. All right. Let's just see here. Secondly, let's talk about these tax proposals. So a lot of people have been concerned about how they're going to pay for this infrastructure bill. And so they've been talking in the United States. They got this $3.5 trillion, the number's always moving around, infrastructure bill. And they're trying to figure out ways to pay for it because obviously the government doesn't have enough money through normal tax revenue. They want to remove tax breaks. They want to increase taxes, apply surtaxes. And one of the ideas that's been floating around has been this idea of charging an unrealized capital gains tax. And so basically what that means is, let's just say you're Jeff Bezos and you've held Amazon shares. If you have Amazon shares, you have some of the best collateral there is. Every single bank will look at what you own, and let's just say it's Amazon shares, and say, if you want to borrow against it, you can. We'll take into account that there might be, 5, 10, 20% volatility, but your Amazon shares are as good as a house in terms of collateral if you want to borrow against them. And so what a lot of billionaires do is, instead of selling stock at the highs or getting rid of it, they give it up as collateral and they borrow against it. And there's two advantages to that. Number one, you don't accrue capital gains tax when you sell them. And number two, you own full ownership rights to the voting rights of that stock that you own as well. So somebody like Elon Musk still owns around 25% of Tesla. He's been very careful to pretty much never sell Tesla stock, because I believe that he wants to retain his voting power as much as possible and his control over that company. And because he's had such a massive ownership of Tesla stock, and Tesla stock's just ripped, it's like 1,100 today, he's become the world's richest man. He's almost twice as rich on paper as Jeff Bezos. So what people like him do is they don't sell their stock, they borrow against it. And basically it allows them to almost never really pay income taxes, because on the side of that, just to be CEO, they take a measly salary. Jeff Bezos gets paid $82,000 a year to be the CEO of Amazon. And he probably pays more in taxes based on other things, maybe other investments that he has, but he's not paying the massive taxes on the appreciation of Amazon stock, or likewise Elon Musk is not paying billions of dollars of taxes every single year because Tesla stock's going up, simply because he's not selling it. So what one of the proposals is inhibiting kind of a unrealized capital gains tax to billionaires, specifically in the situations of Elon Musk, who just hold their stock for long periods of time and borrow against it. And the tax basically states that, look, if you are in the top billion of income earners, let's just say in the US, even if you don't sell your stock, we're going to look at what the value was at the beginning of the year and what the value was at the end of the year. And we want to take a chunk of 0.02% or something like that. They're kind of still talking about the number. Well, there's a couple problems with that. Number one is that the following year, let's just say you pay your 0.02% unrealized capital gains tax, your stock could fall by a ton of money. Does that mean that you get a tax refund? Does that mean that you have a capital loss you can just carry, forever? Who knows? But it could be detrimental, obviously to some billionaires who, let's just say, have a massive tax bill, and they actually don't even have enough liquid assets to pay for that tax, so they have to sell the stock to pay for the unrealized capital gains tax. And then the next year it just drops. And does the government give you the money back? I don't know. In theory, a lot of the supporters of this bill are saying, look, it's not like this tax is going to everyone. It's just the billionaires because this is the loophole that they use. Don't worry about the unrealized capital gains tax. But the fact is that I believe that a unrealized capital gains tax is actually illegal. One of the things here in this article that kind of goes over that is the problem with taxing billionaires' unrealized capital gains are myriad, starting with the question of its constitutionality. The 16th Amendment gave Congress the power to collect taxes on income. Defining unrealized gains as income would likely result in a court challenge. And the other problem with this too is that if you start doing this and you tax unrealized gains, people are going to likely funnel their money into assets that can't be valued normally like a stock can. We know what the value of a company is because every single, Monday through Friday it's traded publicly, but we might not know what the given value is for a piece of art because somebody has to set that value by either offering that much to buy it, or there has to be some type of valuing mechanism like, how the government assesses properties, basically. So there's also the problem of valuing private assets from non-public businesses to real estate, art, and the like. And in the event of a bear market, there presumably would be tax losses to carry forward against future gains. So again, implementing a law like this, people would probably just move to assets that can't be traditionally valued, or even better, move to Bitcoin, because you can't prove how much Bitcoin you have ever unless you decide to voluntarily give up that information. And, maybe at some point the government will put some type of policy in place where they say, look, you got to tell us all the addresses to your cryptocurrency, but it's so easy to, just not report that whatsoever. So yeah, what are my thoughts on this? I think it's that the government is trying everything to get money for what they need. And that's because they just don't have enough through the current tax revenue. They're always running into these self-imposed debt ceilings because they're borrowing way more than they're taking in. And so they're trying to find creative mechanisms to take more money through taxation. And so to most people, they might look at these laws and say like, well, why are all the billionaires bitching about this? Like, what's the big problem with taxing unrealized gains? They've made a ton. Why don't they just pay their fair share? And Biden says this all the time, pay your fair share, pay your fair share, pay your fair share. Well, it's some people will use the analogy of the slippery slope, which is like you start taxing unrealized gains for billionaires, and then it moves down to millionaires, and eventually everyone's 401ks, right? Maybe that argument doesn't hold a ton of weight, but essentially what it does is it incentivizes creative accounting across the board. And so just like how banning drugs doesn't really stop people from bringing drugs in the country because they want it, and it's the same thing with guns, in my opinion. You could ban guns will find a way into a country. I think it's really hard to stop people from, just accumulating massive amounts of wealth through stock. All they have to do is sit, found a company and wait, and they accumulate massive amounts. And for the government to try and take a chunk of that will just incentivize people to find different ways of counting and perhaps actually hurt the economy by moving some investment outside the country where you might have a place with more favorable tax laws. There's a lot of people in cryptocurrency who are moving to Puerto Rico to do their operations because of this as well. And so it's actually better to give more tax incentives to stay in a country to get people to set up their infrastructure in the first place. It's harder to move out than to move into a place with good incentives. So I think if they want to make more revenue, try and do what you can to get people to stay in the country. But yeah, it's a very weird economy right now because we have all these open jobs, yet the most open jobs are kind of these low skill, low barrier to entry jobs. And then the high skill jobs, there's still demand for things like software engineers and things like that, but not to the same extent. So what you have is you have all these wages rising, but even with the wages rising, you don't really see any translation from that into the taxes and paying for everything that the U.S. government wants. And that's because it's usually the billionaires in the top 1% that are paying a massive portion of the taxes that fund these things. So I think when it comes to interest rates, a lot of people are saying, look, now that we have inflation, the Fed's definitely going to raise interest rates. But as soon as you do that, the government has to, finance higher debt payments every single month or every single year through the sale of bonds. So I think that they're going to taper the bond purchases. But I think when people say that, oh, we're going to start getting rate rises in 2022, I don't really see that happening. And they've been saying 2023, but we'll see how easy it is for them to raise rates. I think a lot of people are leveraged up right now, but that's just my 2 cents on this. Secondly, we're going to talk about Bitcoin, and there's always something interesting happening in Bitcoin. But one of them is that India is taking a U-turn, and there's a lot of reason to pay attention to these other countries that are getting involved with cryptocurrencies, specifically Bitcoin, because you get to see how when the Bitcoin price rises, people really change their opinions about it because they see opportunity. They see the opportunity to tax it. They see the opportunity to build new industries. As long as the price of Bitcoin keeps going on this path, it's kind of this wavy path that kind of just keeps going up exponentially on a log chart. It's going to be really hard for countries to shut the door completely on Bitcoin, even really centrally planned countries like China. So India is the world's second most populated nation. It's one of the fastest growing markets for cryptocurrencies. However, the Indian government, with its controversial approach towards the matter, causes confusion on how locals can operate with digital assets. Earlier in the year, the authorities plan to impose a total ban, similar to the one on China, and even criminalize the ownership of mining cryptocurrencies and owning them. The government started softening its stance within the next few months, and the upcoming regulations might not be so harsh. According to a recent report, the legal framework on Bitcoin and altcoins will see the light of day by February 2022 to clarify the taxation of transactions and gains. Surprisingly, the authorities will even discuss the option of accepting cryptocurrencies as an asset class. What should not happen tomorrow is that if I start a personal digital currency and after good marketing, everybody buys it and appreciates it, I run away since I'm a private player. Everybody has actually bought that currency by using other assets. The government needs to look at regulation in order to avoid the above. So what you have is you have a timeline. May 2018, India actually bans banks from dealing with crypto customers and crypto businesses. March 2021, they talk about just banning ownership of it outright, banning mining, banning traders. And then a few months later, as Bitcoin kind of corrects and then comes back to all-time highs, we have a report coming out saying that they're going to discuss the option of regulating cryptocurrencies as an asset class, taxing transactions and gains. And Indian culture is really interesting because when you look at what they do through generations, through inheritance, through legacy planning, they're really big into gold. A lot of Indian families have, a lot of gold jewelry that's just passed through generations, hundreds and hundreds of years of pristine gold jewelry. In fact, in 2004, when there was a big tsunami in Indonesia, a lot of Indians were able to rebuild only because they were wearing gold bangles and gold necklaces and gold teeth or rings when every other part of their property was destroyed. So there's this real appreciation for gold in that culture. And like we've talked about on the show, a lot of people are now viewing Bitcoin as digital gold. And so another thing that has been seen has been this shift in investment in India towards Bitcoin. So the residents of India, known to be a gold-loving nation, have increased their digital asset investments from 200 million last year in 2020 to 40 billion this year. So that's really, really exponential growth. And like I've said, I think there's always going to be a demand for gold, but I think younger generations are looking at Bitcoin on par or even superior to gold. And so people have spent a lot of time thinking about Bitcoin as a fad, and I think we finally turned the page to say, look, I think this is going to stay. Maybe it goes up, maybe it goes down, but it's never going to completely go away. And because of that, we have more people talking about the possibility of inheritance planning and what you do with the Bitcoin that you have, because there's this finite amount, this pool, and you can only own a chunk of it. Some people are buying Bitcoin for really long periods of time. We've kind of gone out of the first 10 years of Bitcoin and we're into the next 10 years. But this can be something that we're talking about when I'm 50 or 60 and I'm still doing this show. I'm still holding on to the Bitcoin I bought when I was, 20, 23, 24 years old. So yeah, really interesting to see that turnaround. And then, the big news that really went underappreciated this week was that US regulators have weighed avenues for banks to hold crypto. This is massive because right now banks won't touch cryptocurrency. They don't even like it when you withdraw cash from a crypto exchange. They think you might be a money launderer. Now what we have is a team of U.S. bank regulators devising ways in which banks may hold crypto on their balance sheets, provide custody, and facilitate client trading. So we're talking about the JP Morgan Chases, Wells Fargo, up in Canada, BMO, Scotiabank. This is an American thing, but Canada always follows suit. We're talking about big banks entering this game. They've missed it for so long. It's the reason why Coinbase and Robinhood and a lot of these crypto companies have reached billions of dollars. There's just a demand for these services to hold cryptocurrency on clients' behalf. It's a massive, massive industry. And now it looks like the FDIC is saying, look, if we don't bring this activity inside the banks, it's going to develop outside the banks. And that's, again, like I'm saying, you have Silvergate Bank as well, which is a crypto-first friendly bank with a banking charter that facilitates billions of dollars of transactions between exchanges. It's an opportunity, and the regulators are starting to say, look, we can't ignore it for any longer because basically people are just going to move to different banking systems if we don't work it into ours. So it's game theory. It's like you ban it or you become one with it. It's either like, there's a saying about that. I can't remember it. It's like, join them or lose them. I don't know. But anyways, there's been this massive race too, because cryptocurrency ownership by banks isn't really, looked upon well, and there's not clear regulation on this. Everybody has been trying to get access to this space by developing things like ETFs and futures or regulated products that track an unregulated market, because they want to get exposure and they know this stuff is the future. So we've been talking about ETFs and we've been talking about futures and all these things for Bitcoin and Ethereum and all that. But, at some point, maybe those will become a moot point because you'll be able to just buy and sell Bitcoin at your local bank, just like you can buy and sell US dollars. I think there will be market makers for this all over the place at some point. There just have to be rules. All these banks are studious rule followers, and I think that stuff's coming. Really quick, too, I found this post on Reddit here, and this is talking about Bitcoin in 2013. There's a big shift, and I think Silk Road ended up going offline, and people were still trading on this exchange called Mt. Gox, which was basically the only crypto exchange at the time. And somebody posted 9 years ago on Reddit, the price of Bitcoin was maybe around $50 or less. They were talking about what the game theory was for Bitcoin moving forward, what it would look like if Bitcoin became a dominant medium of exchange and a store of value. And I'll just read what we said. This is pretty prescient stuff. Guy's saying, we are dealing with a massive new technology that has the potential to change everything. It will change how money is transferred between countries. It could become the international standard among currency evaluation. It will change how the drug black market operates. It will change how governments regulate borders. This is not a speculative stock. This is not a currency useful for day-to-day transactions. You cannot be a Bitcoin millionaire without knowing that if the network got cracked, you'd be worth $0 in minutes. We have a long, long way to go yet. And in order for the above things to happen, and they will happen even if Bitcoin gets cracked or made illegal, something else will replace Bitcoin, the market size of Bitcoin needs to increase. So you have all these steps he outlined here. $50,000 market cap, early adopters push it up 1 cent to 20 cents. $1 million, people start using it for small transactions like buying drugs on the internet. $1 billion or $50 million, small time illegal activity will flow through it, and people will start to use it to transfer money across borders. This is probably 2012 Bitcoin. $1 billion mid-level illegal transactions and mid-sized legal transactions will now flow through it. Angel and VC investors, and this is basically when he made the post. It was around $1 billion market cap. $25 billion, higher level illegal transactions, mob bosses and large investors, multi-million size, start to move in. Governments start to get involved, try to regulate what they can and create rules for the system, which they haven't really done that much of right now. High net worth individuals use it for international currency transfers. $400 billion, that's kind of where we were in 2017. After that, large businesses and investors move in, becomes a de facto standard for illegal activity. It's really bad for illegal activity now because we have all these blockchain forensics. Government regulation cracks down, becomes more rigid. A few Bitcoin businesses are shut down by the government without warning. Yep, prompting fear and anger. Small companies regularly use it for international currency transfers. $1 trillion market cap, and this guy's predicting this in 2013. Again, the market cap was around $1 billion. He predicted what the steps would look like when it was 1,000 times where it was. After that, international currency movements start to flow through it. Very large investors move in. It is talked about as if it were standardized and common. Everyone knows what Bitcoin is. I actually was reading a really interesting post the other day that The term Bitcoin, I would say internationally, is probably more recognized than the euro or the Swiss franc or the yen. If you go to third world countries and you ask them what a yen is, they probably couldn't tell you what country that was from, or the franc, or the euro is a pretty big one. But Bitcoin, I would say now is the second most, I would say, recognized currency, second to the US dollar. It might be on par with the name recognition of the euro internationally, but I think every country kind of knows what Bitcoin is at this point, or has heard of it and knows that it's a currency. So businesses learn to follow government rules and procedures become standardized, i.e. MicroStrategy and all these ETFs. Large businesses use it to transfer currencies internationally. And then $5 to $20 trillion, this becomes the de facto standard of international trade and currency valuation, replacing the dollar as the global standard. Prices stabilize and shift only a fraction of a percent a day, can now be used as a real currency for the first time since inception. And so this is kind of what I've believed as well, and this is why I don't sell any of my Bitcoin. I think that it's going to become a de facto standard. Every country is going to use it and recognize it in one way or another because it's so easy to use and transact with. I'm going to El Salvador, and they have implemented their own government wallet. They created all this stuff in 3 months. And now basically every vendor down there will take Bitcoin through the Lightning Network, which means they can get instant settlement with zero fees, and they can have their money right away. You still have the volatility of Bitcoin. People, because of that, don't want to get paid in it right now. But really forward-thinking people, like athletes, actually do get paid in it all the time. But when it becomes a $5 to $20 trillion asset class, it is bigger than any single company. It is worth more than the QQQ. It's worth more than most economies around the world already. But when it becomes that big, what I think basically happens is that everybody will just accept it. And the volatility will really start to diminish. I think even this year, the volatility has shrunk quite a bit. But the volatility will only really exist if people doubt the integrity of the network. So if the Bitcoin network is hacked, miners are compromised, which nothing has even come remotely close in the last 10 years to that happening. As long as the network and people have belief in the network is running as the code was planned 12 years ago, it becomes an international standard. And that's that. And that's why I'm not selling any of my Bitcoin, because there's this term in the Matrix. I was watching the Matrix the other day. I forget the term, but it was like, am I going to have to use this power? And Morpheus says no, because by the time you can, you won't have to. And so that's the thing with Bitcoin is when are you going to sell Bitcoin? It's just by the time I want to sell it, I won't have to. It'll just be currency. It'll just be spent. It won't be sold. It'll just be exchanged and sent by the time it gets to where I want it to be and it gets to where I think it can be. It'll just be a standard. So yeah, a little bit of your Bitcoin hopium for the week. I hope you like that. Facebook did change its name to Meta, and that kind of segues me into the last story. And we're going to talk about FOMO in the markets, and I'll try and keep this one not super long because I kind of stuck on that last story a bit. But this market this year has just been filled with one meme stock and one pump and dump after another. Last week it was Trump's social media network. This week, Facebook changed its name to Meta, and now a random materials company called Meta Materials soared 18% just because of that name association. Earlier this year, a company with the ticker symbol Zoom ripped hundreds of percent, or last year it ripped hundreds of percent, even though it's not connected to the company Zoom, which ticker is ZM. People are always looking for the next get-rich-quick scheme, and I think there's this desperation because things are becoming more unaffordable, and because you have this mixture of social media that everybody is trying to get rich quick. They're trying to find the next doggy coin, MemeStop, GameStop, AMC, all these random things. It's really hard to predict what's going to be the next thing. But there are, of course, patterns as to how these things play out. What I really wanted to talk about here was how to avoid FOMO, how to not feel like you have to take part in every single one of these things, how to not feel like you have to beat yourself up if you missed one of these things, and how to avoid jumping in on these things last minute and then realizing 50, 60, 70% losses that are very, very hard to recover from. And the flip side of that, if you're an experienced trader, how to not short these things prematurely, because shorting can be much more disastrous than going long on something. You can lose 100% of your capital going short very quickly. You can basically never lose 100% of your capital buying a meme stock. You'll lose maybe 98, 99%, but as long as the market doesn't deem the thing that you're buying worth zero, like a BitConnect, or if it's a complete pyramid Ponzi scheme, You'll never lose 100%. It happens all the time with shorts. So this week was all about Shiba Inu. So you had all these companies cashing in on this. The most popular apps this week were Coinbase, Crypto.com, crypto things. And in fact, now Coinbase has even, said, trade BTC ETH SHIB. SHIB wasn't even a top 50 cryptocurrency like 3 to 5 months ago. Now it's bigger than Dogecoin, which also had a run last year. The market cap's around $50 billion. And so what is behind all of this, and how do you avoid feeling the sense of FOMO that you missed one of these things? And I'd say the point number one is stop comparing yourself to other people. There's a lot of talk that teenage girls are, becoming more mentally unhealthy because they're always going on Instagram and looking up photos of, models that are traveling the world, or maybe not even teenage girls. Maybe you're in your 20s or 30s. You're looking at other people successful on social media, and you're seeing them live their best lives, and they're portraying this picture of this ideal lifestyle, and you feel this sense of FOMO, like you've missed out or you want to get there. With cryptocurrencies and stocks, it's a little bit different because you might see people making all these gains on these things, and you can actually do something right away, which is you can FOMO in and you can buy all of these things. And what I have to say when it comes to that is that same sense of comparing yourself to other people when it comes to body image or whatever is also really bad when it comes to investing. So if you're following people that are constantly promoting, I just made generational wealth, or like, what are you doing not investing in these things? If people are stoking that FOMO in you, that's a really toxic environment to be around, because it just leads to really bad decision making. The same way that people go about watching, models, and they end up going bulimic or anorexic because of it, and they, blame it on that. There's a bit of obvious self-responsibility involved in that as well. The other thing too is that just be very wary of what you see on social media. There's been a lot of posts going around when it comes to Shiba Inu that, like, you could have put in $3,000 in 2020 and it'd be worth $5.7 billion today. While that's true, a lot of people have been posting that they did the same thing, or they bought it in 2020 and they sold it, at a loss, and it went to $1 billion. A lot of those things are 100% fake. And the reason behind that is you have to just think of the math. If Shiba Inu is worth 50 billion today, and someone told you, oh, if I just bought, $1,000 worth in 2020, it could have been worth $1 billion. That implies that $1,000 worth was worth 1 or 2% of the entire Shiba Inu project back in 2020. And that's insane. Full out, that's insane. They gave 40% of all Shiba Inu to Vitalik Buterin, who donated it and burnt it to a charity, I believe. There is one person here that made $1 billion+ on Shiba Inu, but they ended up buying, what was it? They ended up buying 70 trillion, quadrillion, or whatever Shiba Inu. The unit bias is crazy on this as well. They ended up buying trillions of dollars worth of Shiba Inu, and or they ended up buying trillions of Shiba Inu for a couple $1,000s. Now it's worth 5.2 billion, which is about 10% of the market cap of the entire thing. So this one wallet here holds 10% of all the Shiba Inu, and it hasn't been active, hasn't done any outbound transfers for about 200 days, but I'd imagine someone owns this wallet and has access to it. If you own $1 billion+ of something that's total market cap is about $50 billion, it is very, very difficult to sell that without tanking the entire value of the project. So when you hear people saying like, oh, I could have been a billionaire if I had Shiba Inu, it's just like, if you were actually in this situation and you tried to offload all of that somewhere, first of all of this stuff is tracked. If they saw some wallet with $1 billion of Shiba Inu and it went sky high and then it was transferred out, everyone would just dump, because they would see, oh, look, the billionaire who owns 10% of the supply is moving all his funds to Coinbase. So that's one aspect of it. And then also, like, good luck. You're going to have to sell periodically every couple hours, because the liquidity for these things is not that great. And it wouldn't be nearly as much by the time you sold it. There's no way of calculating how much, but I would say if you have $5 billion of Shiba right now, you try to go to an exchange to sell it, you would dump the price over 50%, in my opinion. There's no way you would be able to offload that systematically without taking a few weeks or months. And then who knows where the price of Shiba goes from there. But yeah. The other point is don't FOMO if you think that something is a bubble, because a lot of the ideas of people's beliefs when it comes to these meme coins is that they're all bubbles, they have no value, and it's just, I want to be part of a movement or a trend. And your thesis is you're going to buy something and you're going to offload it onto something. You're going to offload it onto someone who thinks it's worth more. So your whole thesis is predicated upon, I don't think this thing actually has a lot of intrinsic value or any worth whatsoever. I just want to find a sucker who's going to pay more for it. And I just don't think that's going to hold up long term as an investment thesis on just about anything. And the thing that you have to also be aware of is break-even multiple, which is that, okay, let's just say you FOMO into something. I've seen so many people buy a stock or a crypto and it drops 50% and they say, well, I'll just wait for it to go back up again. The break-even multiple works like this. If something drops 50%, your thing has to double to get back to break even. So not even a gain, just break even. It has to double to get back there. When it goes down 75%, it's got to go up by a factor of 300% for you to get back to break even. So the more that you let these assets bleed out, when you incur these big losses, first of all, when you finally sell them, if you do, it's going to take you a very, very long time to make that back, to make a 300% return just to get back to break even before you made that one stupid decision. But second of all, if you continue to hold that asset, you're basically saying, look, the market thought it could use a 50% haircut, but I think in the next day or the next week or whatever, it might double. And so your thesis just gets dragged out and you end up just holding bags on these things because you don't understand how a break-even multiple works. So really important to do that. Doge dropped 50% in a few days, and that was when it was 75 cents. And now it's down 75% from the top of the market, which means, again, it has to 3x from here to basically get back to where it was when Elon Musk was on SNL and he was talking about Dogecoin there. On the flip side, and I'll make this one quick, do not try to nail the top on any of these things. I did okay with SHIB. I was trading it a little bit. I tried shorting it, but I shorted it way too early. These things can go up a lot further than you think that they can. And because of the way that short selling works, you don't even have to put your account all in to get it liquidated. I could have a $100,000 account. I could short $10,000 worth. And if the thing goes up by a factor of 10x and I don't stop out, I can get my whole $100,000 taken away. That's just how shorting works. You have unlimited losses to the upside. And that's why short selling is not that sexy of a game, in my opinion, because it's really only good for capturing short-term moves. So when it comes to something like SHIB, you cannot predict how high this thing is going to go. So when you decide to take a short position, you need to have a logical exit point. And my take on this is that you should never short something that doesn't have any prior resistance, any prior price that it's gone to. If it's just going to the moon and there's no way of predicting with any model where it's going to stop, which it's almost impossible to do when something is in blue sky, you're opening yourself to unlimited risk and unlimited downside. And it's better to just wait for a little bit of that bearish confirmation before you decide to go short. Wait for it to drop 10 to 15 to 20% before you decide to go short, because at least then you'll have an area where you can say, if we make new highs, then my thesis is wrong. So you have to have some sort of level before you decide to short one of these things that you stop out of. I think a really good, easily understandable example of this is that Michael Burry, of The Great Short, he made all this money shorting the housing market. He's been shorting Tesla like crazy for the last few days and weeks. He had a multi-billion-dollar position shorting Tesla. And Tesla recently broke past its all-time high. It's at $1,100. He started shorting it at like $650, $700. By the time it got to $850, $900, he said, I got to take the short off. And why did he take it off that particular place? Because he knows that when a stock goes past its previous all-time high, it likely will just continue because it's entering unprecedented territory. Had he had waited and maybe took it off today, he could have liquidated his entire company's account. He probably booked a 10 to 20% loss, at least on that position alone. Who knows what it represents for his whole company. But it just goes to show you that shorting is not a really fun game, especially when the momentum is working against you, because it opens you up to unlimited losses. It's better to short, in my opinion, into weakness, into momentum. And again, we've heard this term short squeeze all year. I just think stay away from it for the most part. Wait for confirmation. And one of the keys that I really use when it comes to technical analysis is I wait for the bear volume to prove itself. So I'll go over a quick example so you can kind of see what I'm talking about when it comes to SHIB. Because I think SHIB, there was a very logical place to short it the other day when it hit a really high price. And I think that logical point was, when does the bear volume actually start increasing? And so what we saw is it just kept running and running and running and running, and you had these little red blips where people would sell off, but it would just get bought up and continue back to the highs. And so you might have started shorting here, here, here. You would have been under a big, big loss. And so the confirmation signal that I wait for is when do the bears start accelerating the volume? When I look at these little candles down here, I can see that the bear volume is increasing. There's increasing pressure on the shorts. I can see that the EMAs have crossed bearish. I can see that the RSI support is gone. I just get more than one signal that there's a little bit of a top involved. And so you might have missed this 20% move, but again, if you play your cards right, you can start shorting around here or there, and you can say, look, if we make a new high, I stop out. But if I think this bearish momentum is going to continue, I have a lot more upside if this thing goes lower. So yeah, just a quick lesson on shorting. And then last point to all of this, hope I don't go too long here, is that there's always more opportunity. So whether you missed going long or you think you missed going short on something, there will always be meme stocks. I think this trend maybe started this year, and I'm surprised that it took until 2020, 21 to start because we've had social media for a while. I really think it was the advent of all these stimulus checks that really got a lot more people into the stock market. But these opportunities will just continually reemerge because there's all this money floating around and people looking for the next big opportunity. And if something captures the public's imagination, whether it's a Trump social media thing or it's a stupid doggy coin, I think these things will keep reemerging just like memes reemerge. So people say, oh, I think the meme stock thing will end. Well, you got to ask yourself the question, do memes end? No. There's always a new one somewhere. There's always a new joke popping around. There's always some new thing to invest in. And even before meme stocks, there's always more sectors and actual opportunities to invest in as well. So I don't think this will go away. If you miss one Shiba Inu or one Dogecoin or one GameStop, I think we're going to have years and years and years of this to come. As long as we're in an environment where money is continually losing value and people need to invest in things to have a shot at ever affording something like a home, you're going to see swaths of people take their paychecks, put them into these virtual casinos, and wait for the next big thing to emerge and then pile in. There's a lot of crowd mentality. At the end, when you look at all these charts, they all end up looking very, very similar, which is you get these epic run-ups, and then eventually when a top is reached, these things just bleed out for weeks and months. So, to actually see the chart, that's what it looks like right now. There's no top on SHIB yet, but I think we've learned a lesson from Doge that when there is peak euphoria, eventually these things just bleed out. I actually like the comparison between SHIB and Doge. They both had these kind of like one leg sideways, second leg up. And then on Doge's case, one leg sideways, second leg, big drop, little bounce, and then bleed out, right? I think eventually the SHIB chart will look just like that as well. So you don't need to FOMO into that. The other thing too is that just mathematically, like everyone's looking for the next big thing so they can make it. They can have all their crypto in something that goes up 100 or 200%, and then they don't have to trade stocks for the rest of the year, or they double their money and they're good to go. I don't think that satisfies anyone. I think people who have made 100, 200%, they're just looking for the next opportunity to do that. And when you look for opportunities that are skewed towards providing really intense high flyer gains, you put yourself at risk at buying a top and then holding bags down to 50% if you don't know what you're doing. Better than that is to look for smaller opportunities because these compound over time. And so maybe you don't get your 100% in one go, but 1% a day is 170% annualized, even if you have a 70% win rate. So if you're buying stocks, you're making 1% a day, you're taking a max profit of 1%, you're taking a max loss of 1%. If you win 70% of the time on those trades, you make 170% a year, which is really, really good. Or better, find opportunities based on fundamental analysis or technical analysis where you can make 20%. That way, you only need to make 6 successful trades in a row, and you also make 160, 170, 80% compounded as well. So you don't need to go all in. Find things that are more quality, and I think that will help you abet some of your FOMO, whether it's to the short side or to the long side. Know that these things pop up all the time and that you don't always have to get the most volatile ones to do really well. Don't compare yourself to other people. Continually try and improve yourself. We try and improve ourselves personally, 1% a day. If I get 1% a day better at Spanish or 1% a day better in physical health, I'm pretty content. I don't try and double my physical health in a week. I know some people try and go through intense workout regimens, but when you try and achieve a lot of stuff really, really, really quickly, it's very easy to lose control and lose it. And it's like people's body transformations is a really good example of this. They'll go through an intense Hollywood regimen, and then they'll put all the weight back on really quickly. Or you'll do a keto diet for like 3 months, and then you'll say, I'm done with keto. It's surprising how easy it is to put that stuff back on rather than just getting a consistent game plan. And for me, consistency is key. It's how I've protected my wealth. It's how I've grown it. I don't look to make 10, 20% in a day. I'm happy with 1 to 5%. That's a lot to do every single day. And I know that I'm going to lose at least half the times when I make those picks. But as long as I keep toiling away at it, the wealth will come. So do yourself a favor. Don't FOMO. That's my tip of the day. And I pass it on to you as we end the show. How do you avoid FOMO? You see these things on social media. You see these things when you trade stocks. How do you avoid it personally? Or how have you not avoided it? Have you fell victim to any of these things? And how do you recover from that and go back to a state of normalcy and constant, steady progression instead of immediate gratification? Yeah, we'll open it up, see how people feel in the chat. How's everyone doing today? You got Benito. Quiet day today. Trade your setups, nothing else. Yeah, find your edge is really, really important. I found that, again, one of the big things that I did to change my trading style was to play a little bit more momentum, but instead of trying to chase an entry, I would wait for a higher low. I would wait for, the back test on something. I'll give you a good example here on SHIB. Like, instead of trying to short this because the RSI is really high, there's plays there potentially. I would say, look, I wait for a little pullback, start scaling in there, use the last area as my stop, and see if that works. Take my loss if I'm wrong, and then just let it ride. But yeah, if you want to last in this market long term, it's really good to avoid FOMO at all costs. Come up with your strategies to come up with that. I hope that makes sense. But yeah, another thing really quickly, my girlfriend and I are going to El Salvador, and she's on the chat right now, and we are going to be filming this big multi-part documentary about that country, how they became the first country on earth to make Bitcoin a legal tender. And we're always looking for things to film down there. If you know anyone from El Salvador, I am looking to speak with people who understand the history of that country a little bit better, who'd want to come on a camera and talk about it. It's a very dark history of the country, but there's a lot of things in play that I think led to the president legalizing Bitcoin. He's a very interesting guy. And so, yeah, if you guys have any tips on El Salvador and any of that stuff, please reach out to me on the Discord or on my email. I'd love to hear from you. And look forward to that, where you're going to put this multi-series documentary out. It's going to be the biggest project I've done on this channel yet. It's part of the reason I haven't been posting a lot of consistent videos, but it'll be one of the greatest things that I make, because it's going to be both a travel log. It's going to have a lot of fun elements to it. You'll get to see how Bitcoin works down there. We'll be interviewing a whole ton of people to see what their opinions are on it down there. And we'll also talk about the history of the country and why I think them bringing Bitcoin in as a legal tender is a really significant sign of hope for other third world nations around the world as well. But yeah, thank you so much for watching, guys. Hope you take care, and I'll see you next week. But I will be away. I'll try and do a couple of these shows live from El Salvador, but I might mix up the schedule a bit. We might just do a little hang and chat sort of thing instead of me covering the news, because I'll just have my laptop. But I'll be here next week, and then for the rest of the month, I'll be in El Salvador. And yeah, if you have any questions about anything, send them my way. And then don't forget to join the Discord if you haven't already. I will do my best to have more conversations there and share my trades as well. Every now and then I find ones that are very obvious. I think the SHIB one the other day, the big 35% drop and then bounce was something that I will try and share with you if I ever take those again. So we can make a little bit of money together and have fun and have a great week. Yeah, take care, guys.